Hey guys, what's up? Wanted to go over a couple of things that I really took away last night because we did our passive investor network event last night. Really great event. We had some great people come, and it's always the thing that I share with everybody, especially if you want to be a passive investor in real estate, is your network is your net worth. Like, there's going to be deals made inside of a net in your network, the network that you join, right? The network that you're a part of that's built on purpose. Your network has to be built around the deal, the real estate. When I say real estate, when I say the deal, I'm talking about real estate, the real estate you want to invest in or whatever you're investing in, right? If you want to invest in Bitcoin, then you're going to have a network full of people who understand everything about Bitcoin, what it is to invest, how long you're going to be investing, where the trends, where the market's going with that. For example, I think President Trump just kind of passed a bill that says that you can actually use your IRA, 401k retirement accounts to actually invest in Bitcoin, private equities, things like that. But if you're not a part of a network like I am, you don't know those things. That's why it's important to do that. But wanted to share that when you're in a network full of people who are committed to what it is you're doing and where you're going, you get to hear the inside scoop on stuff that you normally would know about, right? For example, like last night, we were talking about the 1031 exchange. We were talking about, a couple of guys that were there, fractional CFOs, and we were talking about the underwriting on industrial real estate, multifamily real estate, some of the bigger stuff, and what it is that they're seeing. And I'm able to get insight that I wouldn't have normally got because I don't do industrial. They do. But they're able to tell me about that asset class inside of real estate based on their underwriting because they work for some big dogs. And I get to kind of adjust based on what I'm doing, right? That's why you have to be a part of the network because your network is your net worth, man. All of these people are going to contribute to your growth in your portfolio, your investments, insider stuff. You can't have that if you're an outsider because you're going to be too late. But I wanted to share with you this. I always talk about having a wealth multiplier. What is a wealth multiplier? That is if you're going to invest your money in something that creates wealth for you and your family, it needs to multiply. It needs to not just go like one time, it needs to go two times, three times, 10 times. Like that is a wealth multiplier. Real estate is a wealth multiplier when you're investing in it. And one of the things that I wanted to kind of share with you guys, especially with what I took away from connecting with people last night, because there was people there I hadn't met yet in person. Like I said, I want to meet you guys. And I'm building a network of people who have great attitudes to be able to do that. I get to learn. So the number one thing we talk about, you guys all understand this. Let's say you're a professional, you're a business owner, you're a doctor, a dentist, chiropractor, whatever, right? Like you understand success, you understand that. You already know like there's earn, as it relates to money. You earn money, you save money, and then you multiply money. Most of you guys are already great at making money and earning money with your business, your practice, what it is you do. And some people get stuck on the saving side of things. So let's say you have money in a saving, money dying in a money market account, a savings account. Maybe it's in the stock market. Maybe you have money dying in an IRA, 401k account, whatever. Like if you don't understand the process of being able to put your money in a place where it multiplies for you and creates the wealth that you want, then you're going to be working forever. How long can you run your business and your practice before it dies out? Everything comes to an end. Everything, right? Like matter of fact, they're talking about business valuations and things like that. Sam Alton's talking about that. But think about Chat GTP and how many companies have come before it and how Chat GTP is just going to crush a lot of them, right? Working with Google, working with Microsoft, Gronk is going to put a lot of things out because they're the big dogs in the field right now. But that's going to control a lot of stuff. And if you have a business and you aren't able to keep up what's going to happen in your business, it's going to go away. And what happens if you didn't do something about it, you're going to go away. Your wealth is going to go away. So you want to be thinking about that. Don't just have dead money sitting in an account, savings account, retirement account, 401k, not multiplying at a level that outpaces you. The faster you can work, it works faster than you because it's multiplying. You can only add to what you do, but your money can multiply, right? So the number one ways, like I said, to do that with the money part, earn, save, multiply your money. So let's focus on the multiplying side. So in order for you to actually take advantage of what I like to call the wealth multiplier, there's a couple of things you have to do. Number one thing, you got to make a decision. Within making a decision, there comes a couple of different things. Like, what is the target that you want to have? I tell everybody, I try to set a target for people, $10 million. We were talking last night with one of the guys that talked about the 1031 exchange, was I'm looking for people who have a 1031 exchange that has to exchange out of a $10 million profit margin, right? So that's why I think $10 million. That's where that number comes into my head. It's just a solid number. But think about that for your own business. Could you exit with $10 million? And what is the target that you need to have? What is your net worth outside of the 10 million? What is your cash flow you want to receive? The basically your return on that 10 million. 5%, 6%, 12%, 4%, a coupon where it just comes in whether you work or whether you don't, whatever the case would be, but it needs to be secured by something. So you need to make sure, number one, you have a decision. Number two, you make a commitment to that number. And number three, you need to have that number, which is your target. All right. So outside of the decision, now, number two thing you need is you need a plan. A lot of people, very well, I think I saw a statistic. It was like 90% or 80% of people in America don't have a financial advisor. And if they do have a financial advisor, the advisor doesn't actually put them in a situation where they're going to succeed with that plan. It just makes sure, hey, let's put some money away. And when you retire, let's make sure it does this. But that financial advisor is not actually setting you up for maximum growth or to multiply your wealth. It's just making sure that I call it more like let's just not make sure it doesn't erode away all your money, right? But that's going to happen anyways based on inflation. But hear me out. So with a plan, you need a financial plan. There's two plans, right? You need an income plan because if you're going to get yourself in a situation where you're going to exit with a $10 million windfall, whether that's from real estate, you're going to exit those things. You're going to sell your practice. Maybe you're a dentist. You have a bunch of practices you want to sell and exit into to another dentist, or you want to roll them up, give them to a hedge fund, whatever, chiropractic office, whatever. Like, if you're going to do that, you need an income plan to make sure that your businesses are constantly creating the revenue to whereas maybe your valuation is 10 million or maybe it needs to be 20 million. You're going to take 50% of that because right, you're still going to have a tax thing, which we go back to planning. So you have that income plan because you're going to need to generate this. Wherever you are right now, you need to double down on that. Put a zero on the back of it, 10x it, and then go from there. And then you need a financial plan because while you're have your income plan to execute, what does that even look like? How many customers do you need? People do you need? Investors do you need? Clients do you need? Employees do you need? Like, a lot of times people have this financial plan to grow, but they don't have a plan of growth. They don't have a scaling plan to go along with that to be able to hit the number that they need at the end to start building towards that. So that's a whole nother video. We'll get into it. So the income plan, that's where we're going. And then we need a financial plan. What do we need to do along the way? All right. So the next thing we need to do is once you're actually making the money, you need to be like, hey, what is my plan? Right. Well, this is the third thing really, is how are you going to lower your tax bill? Right? You need to have some type of way, like we said, earn, save, and multiply. So now we're into the saving part. So it's really not saving, it's storing. Where are you going to put your capital? Right. So let's say, for example, like for me, we like multifamily real estate. We have Bell Capital. We're raising money with our investors. We're looking to take care of our people. That's really a way for you to store capital. Like, I see big multifamily real estate like a bank. It's where you put your capital. If you leave your money in bank savings, you're getting what, 0.00, maybe 4, maybe 2, if that, on your money. And you're probably not even getting that, depending on unless you're a big dog, right? But worst case scenario, while you actually put your money saving, which they shouldn't even be able to allow to tell you that you save because of inflation. If inflation is at 2 and 3, and you're only getting a point, like a quarter of a point, maybe 1 point, like you can't keep up with inflation long term, and it's going to continue to happen. All right, but while that's happening, you do need to have your money in a place where you have your plan, you have your income plan, your financial plan. Now you have a place where you can actually lower your tax bill by making the investment in a vehicle that actually keeps up with inflation. It's an inflation hedge, which is why I like real estate. So see it as you're going to be putting your money by making an investment to lower your tax bill because you get the tax advantage of if you're going to be investing in a property like real estate, something with us. But that's where you're going to put your money, right? While you continue to earn more money, build on your income producing plan to continue on to do that. So later, when you have that big exit of $10 million, you already know what you're working on because you have a financial plan, your income plan. Now you have a place to store your capital while you keep hammering on growing your business, your revenue, your company, your profession, whatever it is that you do in the world, right? Next, and I kind of went over this with lowering the tax bill, which is a part of the planning process, is the investment side. What are you going to invest in? Right. For us, we always tell people I'm a big advocate for real estate. I've been doing real estate for 20 plus years. I love it. I want more of it. I want to help more people get invested in it. That's why I'm doing what I'm doing with these trainings, these videos, going over the wealth stuff, because I want to help you strategize for wealth. But the investment part is very important. You got to know where you want your family's money to go, right? I talk about that all the time. Where do you want your family's money? Are you going to be a real estate family like us? That's what I want. Are you going to be a stock family? Are you going to be a private equity family where you invest in private equities and private capital? What are you going to be? What are you going to do, right? Because thinking long term, that's where your investments are going to be. When you think about like President Trump, he's a real estate developer family. He's only now getting into cryptos and Bitcoin, but all of them made their money, all the big ones. Elon Musk only had three companies, X, which is Tesla, and in the beginning it was like PayPal, right? So he put his money there. Right now I think they have the SpaceX, X, and they still got Tesla and probably some other side companies. Jeff Bezos, Amazon. He has his Blue Origin and all the other stuff that he's chasing going to the moon now, but it didn't start there. It started with one company, one investment, one big all-in push. That's where they are. And if you think about that for your own family, your own investments, that is what financial advisors don't tell you. They tell you to diversify. But the people who are the most successful by multiplying wealth didn't do that. They pick one asset class, they stuck there, and they knew it. So, is it going to be stocks? Real estate beats stocks every time because of the volatility, the ups and downs of these things. Is it going to be bonds? Nobody really invests in bonds anymore. Is it going to be gold and silver? Gold and silver are going to be taking a backseat to next Bitcoin because people are liking Bitcoin more. That one's probably a better one if you're going to put all your money there, but very few people are big enough to take a big enough position. I have some. It's hard to look at because again, it's volatile. Like everyone talks about it, but it doesn't have all the benefits that you think. All right. Retirement accounts later down the line when you go to retire and you think that's going to be your nest egg, you're going to have a bunch of money in a retirement account tethered to mutual funds, growth funds, index funds. The ups and downs of where you think your money is going to be, that's going to be rough. And like we said, even your own company, your own business. You don't need two businesses because you could be like, yeah, I made all my money in dentistry, but that is not where people make their wealth. They don't make their wealth through their business. They generate revenue through their business, build up a big company, have a big exit, and then they put all their money someplace else. They built wealth outside of that. It's like Michael Jordan and all these guys. They played basketball, you saw them, but they didn't become billionaires and they didn't become billionaires playing basketball. You can only do that for so long, just like your business, which is your sport. They put their money in other things. That's how they became billionaires. All right. Next, you need to repeat that. So, number one, you're gonna, and we'll start off at the decision. It's the financial plan, the income producing plan, because again, we're talking about multiplying wealth now, right? You have those plans. Now you go, cool, how am I going to lower my taxes? You're not avoiding taxes, you're just lowering your tax bill. And if you can avoid them, right? The tax code is built for people who have businesses, they provide jobs, and they have assets, right? So you're like, hey, I'm going to create a plan that allows me to avoid or lower my tax bill by investing my money in this vehicle, which I'm telling you guys, it should be real estate. Then once you get into that real estate perspective and it's providing you all, like we said, real estate's the best one because it does a couple things. Number one, passive income. Number two, the tax advantages of it as a tax advantage or tax benefit, heavily benefited asset class. Number three, it provides you leverage. And number four, there's controllable appreciation based on raising the income of of those apartment buildings, which is raising the rents, you know, pet deposits, valet parking, valet trash, other income, things like that. Right. So those are the benefits of moving your money there, like we said about the investment. So not only the tax benefits, but the forcing of the appreciation of all those things too. And then last but not least, the repeating of it. With your business, you got to still focus on your revenue and the income generating revenue of your company to execute on your plan. Because you got to make the money, store the money in a place where you made the investments that multiplies the money for you. Most people get stuck on number one. They only focus on, hey, I'm going to earn a bunch of money, revenue in my company. Something happens to them, something happens to the market, something happens to their industry. They get timed out, they're done. Right? That's a hard place to come from. So without thinking through like, hey, what is going to be your wealth multiplier? What is your wealth playbook? I have a book called the how to create what the wealth creation playbook. You can go to bell-capital.com/wealthbook. You can download that book for free. But I go over all of the things that I'm going over with you. There is a very specific playbook. I just gave you an overview of that. But in the repeat side, it's like focusing on your business. Like I want to get to $10 million on an exit. I want to have X amount of money working, worked X amount of percent, 5% on my $10 million working for me. And I need to either earn through revenue and put away $10 million, or I need to earn through company, the valuation of my company and start pulling out of that valuation that money and putting that money to work so it multiplies for me while I'm continuing on in this business. So when it's time for me to exit, retire, do whatever you're going to do with your company, your practice, your firm, you're done. And your wealth has outpaced anything that you could have ever done because that's going to be so important for you to do. But number one thing, I talked about this in the beginning, you don't have these conversations unless you're in a network of people that are having these conversations. You need to meet accountants, CPAs, financial advisors, 1031 exchange people, realtors, brokers, fund managers, debt providers, fractional CFOs. You need to keep up with these things. Tax strategists who actually deal with people on the asset management side, wealth planning side, all of the things that are necessary for you to actually win this game. As you guys can tell, like I'm shifting a little bit from a conversation with you guys because I talk about real estate all the time. You guys know that. I can go down the weeds. That's my thing. I'm like I have the fun. I want to help you guys. But the biggest thing for me is to help more people start thinking through everything about wealth and creation for you and your family. Strategizing on taxes. Hey, look, what if you're going to have a big windfall or a big success this year? What are you going to do? You need to strategize your the tax strategy now. You need to be, hey, look, in 2026, we think we're going to make $10 million or $5 million, $2 million, 500,000. What are you going to do? You need to strategize that today. You need to sit down with somebody like myself, a fund manager. What deals are you looking at, big? What can we put our money in? How can we get invested with you? Could we do it early? Register on Bell, go to bell-capital.com and register so that way you get access to what we have access to now. You can fill out your paperwork, ask questions, and start planning for this year. So that way you can talk to your accountant, your CPA, and go, look, here's the money that we're going to have. I already have this money dog-eared. This is how much money we're going to be investing. And from a tax perspective, what do I need to do next? How can I shelter this, protect this, avoid a huge tax bill at the end of 2026? Like, that's how you should be playing this game. The top 1%, the top 1% of the 1% on this planet, there's really only three guys. You know, they're all playing a very different game than us. The wealth playbook or the wealthy playbook, you should be using all the things that we're talking about. And the better the network you're in, the more you're going to hear these things, the more you're going to succeed at it. So you can start now. It's not a short game, it's a long game. But if you're not willing to play the long game, you can't win the short games. The short games have to lead you up to it. All right. I hope this helps you guys. This is very, very important, and I wanted to share it with you, especially after the event we had. I'm going to be doing a lot more of those. If you want to meet us in person and join my network, you're a part of my network already, but I want you inside. I want to meet you, talk to you, answer your questions if I'm not answering them here. Go to bell-capital.com/RSVP. Get added to the list for the next network. I want to build one of the largest investor networks of great people, all committed to succeed and help each other grow, build their portfolios, have connections in the real estate space, investment space, wealth space, tax advice, all the people that you're going to need for you and your family to actually multiply wealth. All right. So if you guys need anything, let me know. Share this video, like this video, comment on the video. Let me know if you guys need anything. Put it in the comments what you took from this. What is it that you need to focus on to start executing and growing and multiplying wealth for you and your family, for your business, your practice, whatever it is that you do in the world. Seriously, I want to help you guys. All right, so let me know. Talk to you guys soon. Give it a thumbs up or a thumbs down. Don't be a hater and a hider at the same time because I want it all, man. Let's roll. But let's have a good one today, guys. Boom.